obviously invite you in to speak. So we are live streaming and checking, I guess, that it is working, James.
Ben, can you confirm that we're live streaming, please?
Hello. Yes, we are live on YouTube, so all good.
Okay, thank you, James, and good afternoon, everybody, to this meeting of the Leeds City Region Enterprise Partnership Board. We are live streaming, so welcome to those who may be watching in and listening to our discussions. Before I move to apologies for absence and the rest of the agenda, I first of all want to welcome James Young from Government Services. This is his first, but certainly not his last meeting, and we look forward to you and your support as we've enjoyed over the period today from Ruth Chaplin, who I know is listening in, but on behalf of the whole board, I'm sure I speak unanimously. We're grateful for all of your support and guidance and forbearance through particularly recent times, but previously. So I'm sure we won't. we will miss you on here, but nonetheless, our thanks to you. And I'd like the minutes to just record those two things, please. Firstly, apologies for absence from the private sector. I have apologies from Kate Hainsworth and Simon Pringle. I'm just checking whether there's anybody else hasn't arrived yet. I don't see Amir, but anyway, Julie will be able to check. Oh, there he is. There's Amir. Forgive me, Amir. And I'm delighted, having received apologies, Cameron, that you are with us. From our public sector colleges, we have apologies from Councillor Lewis, from Councillor Hinchcliffe and Councillor Jeffrey. And we also have apologies from Councillor Pandor, but I'm delighted that Councillor McBride is here as the substitute. We've also received apologies from guests, namely Councillor Aspden from York and Councillor Cooper from Harrogate, and from our senior civil service sponsor, Peter Mucklow. But I'm delighted. I believe that Councillor Harrand is joining us, although I haven't quite seen him as yet. If he hasn't, or he has and I can't see him, welcome Councillor Harrand, and obviously Tom as normal is with us, and there's a number of officers in attendance. So I should just remind people that in welcoming you to this LEP board, this is actually the last one of what has been the regular format for, certainly in my case, for a number of years, certainly since we've formed the combined authority and prior to, in that the next LEP board meeting on the 9th of June will be the first where we will be welcoming, as a member of the board, the newly elected Metro Mayor, whoever he or she might be. And we look forward, I'm sure, as a whole board, to working with them to the common agenda that we've been on and will be pursuing, the ultimate goal of improved and sustained improved quality of lives for all the people of West Yorkshire and beyond. Can I just pause and invite any declarations of interest that people need to make in relation to the agenda items? I'm not sure whether I need to declare one, seeing as one of them relates to me, but insofar as we need to do anything, I'm sure James and Ruth will resolve that. Are there any other specific declarations anybody feels they need to make? If so, can you raise your hand or raise the electronic hand, and I'll pick those up as best I can with Julie scanning the screens at the same time. I'm not seeing anything, so as always, if something occurs, please indicate during the course of the meeting and we'll record it accordingly. I'm not aware, James, that we have any items where we need to exclude the press and public. So on that basis, it will be a full meeting, and a meeting I genuinely believe that without trying to stifle any form of discussion or debate or otherwise, will probably not need the full amount of time, and maybe a fraction over or under, about half the amount of time, but we'll see as we go. So minutes of agenda item 4, minutes of the meeting held on 24 February. What I'd like to do is to just check as to whether any queries on those minutes, and in the absence of any queries or clarification points, to seek your approval that they are an accurate record of our debate, discussion, and where appropriate, our decisions. So I'll pause to see if there are any queries before then asking for the approval. There are no queries, so can I perhaps a simple thumbs up to get your sense of approval, electronically or otherwise, following Mandy's lead, and then Mark or otherwise. Fine, thank you. So those are carried. We're now going to move to economic reporting. Whilst the lead is Alan, and we've got James Hopston on the call, I'll just pause to see whether Alan wants to say anything or whether he wants to go straight to James Hopston. Alan.
Straight to James, please. Thank you, Roger.
Thank you. So the floor is yours, James. Over to you.
Thank you, Chair. So as I think we've done in the recent past, I thought I'd try and give a bit of an update of how things have progressed, covering the same issues that are in the paper, but giving you the kind of latest insight as we have it. So clearly we're in a phase now where the restrictions from the lockdown since the start of the year are easing in phases. So alongside that, we're seeing increasing activity in the town and city centres across West Yorkshire. So as of the end of the 16th of April, which is the latest data we have, we've seen quite sharp rises in activity in town and city centres. So Huddersfield being the most notable, where activity was, according to the data we have, close to where it was prior to the pandemic. Other places, it ranges between 25% and 75% of the pre-pandemic level, but all increasing as hospitality and retail have reopened since the 12th of April. So alongside that, as you might expect, the survey data that we get from the Office for National Statistics suggests that more businesses are reopening and beginning to trade as more of the economy is allowed to reopen. And the last data we have from that is, as of the 18th of April, around 78% of business were actively trading, which is up from about 75% a fortnight earlier. That's still quite a bit lower than it was before Christmas, but another 9% of businesses say they expect to reopen within the next fortnight. And that would take us, if that occurs, back to somewhere close to where we were pre-Christmas. Some of the other indicators that ONS are providing suggest that around half of people are now working in their usual workplace, and that the proportion of people on furlough nationally has declined from about 18.5% a couple of weeks ago to about 17%. So in all of those measures, it suggests a gradually improving picture as more activity takes place. And while most of that is national data for the very latest we have, the other analysis that we've had from ONS suggests that West Yorkshire has tracked the national picture quite closely throughout the pandemic so far. Despite some of those kind of, tentatively positive signs of reopening, we have seen a bit of an increase in the number of people claiming out of work benefits over the past couple of months. So in February and March, compared to January, there's been about a 5% increase in the number of people claiming out of work benefits in West Yorkshire. So that now stands at just over 110,000 people, which is up by about 94% since the start of the pandemic. It's fair to say that's been relatively stable since the early months of the pandemic, when we did see a big increase, but it has shown signs of rising again as we've entered the spring of this year. Moving on to think a little bit about business resilience. So as we've talked about before, we've been tracking data on business liquidations from Companies House. The current picture with that is that we saw quite a large spike in March and early April, but that appears to have been driven by the fact that Companies House temporarily paused processing that activity during January and February, and it now appears to be falling back towards a normal level. So that suggests that rather than a big spike in kind of business stress, that's been driven by the clearing of the backlog at Companies House. And the survey data again from ONS suggests a tentative increase in the number of businesses reporting rising turnover, but that's still relatively low. Around 12% of businesses say that their turnover is increasing, and that compares to about 36% who still report declining turnover. So still some challenges despite an improving picture. The number of business bank accounts which are being opened, which we track as a measure of new business activity, again is relatively stable. We saw around 1,400 new accounts opened in Leeds City region in February, which is similar to the level we saw at the same period in 2020. And there's not much change so far this year between early 2020 and early 2021. And the final point that I wanted to make, Chair, was just on EU exit. So we do a quarterly survey with the Chambers of Commerce in Leeds City region. And the survey for Q1 of this year suggested around 60% of manufacturers and 40% of service sector companies had reported challenges in exporting since the trading arrangements with the EU changed at the turn of the year. Again, relying on ONS national survey data, it's shown a very similar picture and suggests a slight improvement in recent weeks, but not a huge shift in the dynamics of that. Back to the QES we do with the chambers, and it would seem that some manufacturers think there may be some price rises that come on the back of the increased costs that they're seeing. But more positively, it would seem that most of the businesses who already trade with the EU expect they'll continue to do so in the coming year. But they're also looking at expansion plans both domestically and in markets beyond the EU for their potential growth. So they're the main headlines from me, Chair, but happy to take any questions.
Thank you, James. Whilst others are perhaps reflecting whether they have any questions, I'd be interested to know to what extent we have any. It was cited on, we know that economic activity has declined sharply. To what extent all of that is lost, or alternatively, how much over time we believe is recoverable? Because I think that's something that's, yes, short term as an effect, but and not so much the shape of recovery, KV, otherwise, as to actually what's permanently lost and as compared to what's temporarily lost. Do we have any sense of that, and how might that compare with other parts of the north?
It's not something we have kind of right up to date, taking into account the latest intelligence. So we commissioned a range of scenarios last summer, which looked at some of these issues, but clearly a lot has progressed through the pandemic since then. I think it's fair to say that we don't have any official data yet on the local economic impact, but the national data at the moment maps towards the kind of more positive end of those scenarios. Clearly, there's still some uncertainty over the path of the pandemic from here, and that will influence the extent to which some activity is lost. I think the consensus from some of the national forecasters, the Office for Budget Responsibility, is that there will be some loss of economic output, but the extent to which that occurs and how that affects different places is still being worked through. But we're hoping to revisit some of that work in the coming months, and if and when we do that, then more than happy to bring that back to the board.
Thank you, James. Brian, did you want to come in?
Yeah, if I may, Chair. The rate of recovery in the southeast is forecast to be much quicker than in the north. PwC produced their economic assessment last month, and it was quite interesting to note in James' report that new business bank accounts and business startups is flat in our region. In the southeast, there are 24% more startups than the previous year. So there's still a big gap in terms of the speed with which the economy is recovering between the southeast and West Yorkshire.
Okay, thank you. Welcome, Khalid. Did you want to come in?
Just, I suspect I know what the answer is to this, but I thought I'd just ask it. Just to do with the freelancer sector, freelancing sector in particular, and certainly in the cultural sector, whether we have any insights about what's happening to those individuals, because they're such a fundamental plank of our creative industries, and many of them haven't had the support that furlough has provided for core staff teams. So do we have any data on what's happening there and how many people are leaving? I mean, I know anecdotally that some of my colleagues have not been able to survive and may not return to the arts sector as freelancers. But I wondered if there was any tangible national or local picture on that.
Thank you, Cully. James, do you want to take that first, and then maybe Brian might have some thoughts, or otherwise?
Happy to. If you want to go first, Brian, by all means, feel free.
Yeah, I mean, I obviously in our region, creative and cultural sector is employing 47,000 people in 7,000 businesses. I don't have to hand any specific data in terms of the freelancer market. I mean, it has increased, the stock of freelancers in the creative sector has increased by 30% over the last few years. But I don't have any specific data on how the pandemic has affected the sector. Although we do have, we've already committed £5 million worth of funding to support various local projects. But in terms of the impact on the pandemic on the sector in the region, I don't have any data to hand at the moment, unless James can add to that.
It's not something I have to hand either, if I'm honest, unfortunately. But I'm happy to take it away as an action and see if there's anything we can find and report back if we can get anything.
And I guess also to what extent, whether this sector or all sectors, that there is the challenge around shortage of skill. When actually the challenge we have is not lack of opportunity, it's the increasing opportunity and interest in our part of the world, whether it be the northern hub of the Bank of England or the latest move of the BBC, etc. So perhaps something we need to come back on. Cully, did you want to come back on it, other than to note that they can't actually give you a definitive answer, but we'll take it away and see if we can find that and more broadly.
Yeah, just I'd really appreciate us doing a little bit more work on it, because it is clearly a sector that ought to be growing, and with the ambition of the region to really celebrate culture in Colesdale, Halifax, Leeds, Bradford, that is a really important economic and social well-being driver for the region.
Well, so, indeed underpins proposition number 5 of our economic recovery strategy. So yeah. As long as you're happy, Cully, I'll just pause again and see if anybody else wanted to raise anything on James's note. I see Amir does. Amir.
Yes, thank you, Roger. It was just a point really from my experience of the construction sector, and I mean it appears that obviously whilst it's been continuing through the lockdown, construction inflation seems to be a really big problem, and I mean, we understand now that it's at about 4%, and there's not really any immediate indications that is going to change. And I think that when we're looking at sort of some of our more challenged areas where we've got projects that are being planned and being designed, I think it's going to have a really it's going to have a knock-on effect, especially in places like Bradford and others where economic viability is already a challenge. And I just thought that it'd be important to sort of bear in mind that's coming on the horizon, and there may well be implications from that.
Good point, Amir. Joanna, did you want to come in?
Thank you, Roger. Yeah, just wanted to say that we had a meeting of the BCG yesterday, and virtually everybody that spoke said that most of their members and various people that they'd been speaking to were cautiously optimistic for the first time about the future. Many businesses obviously starting to reopen. There's no tangible data or evidence, but I think the fact that businesses are feeling more confident is certainly a good sign, and it seems to be unanimous amongst everybody that spoke yesterday.
Interestingly, some of my pals who are in businesses across a wide range of sectors seem to report something broadly similar. There's pent-up demand and opportunities that they're looking to deliver. So very good, thank you. Tom.
Sorry, Roger, just to finish on that, lots of recruitment going on as well, which is obviously a positive sign.
Yep, indeed. But I guess the old saying, one swallow doesn't make the proverbial economic summer, but at least it's a good starting place. Tom, did you want to add something?
Yeah, thank you, Roger. I was just going to say, I've had some meetings with the hospitality and retail sectors in Leeds over the last few days. And I think the overall picture that was started with smaller towns and cities, or at least not the biggest regional centres, have not suffered as much as the bigger city centres from London down. So there's not as much, not as much ground to make up to recover. So I think that's important for us to recognise, and good, a good thing. But still, all the challenges that everybody's got in those places. The Leeds position is improving quite significantly since the easing of restrictions, and the retailers in particular, I think, were quite positive and fed back some feedback. Those who have national footprints fed back that we were doing slightly better than some of our other competitors, what you might call, like similar sized cities, let's say, in terms of the recovery. However, big concerns from retail sector in particular about the business rate, how long the business rates relief will last, and worries that if it was to finish as planned, then it could lead to some quite, some further losses in the sector. And the link that those two sectors make to the issue of those, particularly, I think, younger and older people who are unemployed, who are now claiming benefits, is, I think, probably the biggest concern. And I think it's how we get across to government that we need to somehow transition back, not and avoid cliff edges, whether it's furlough ending or business rates relief ending or grants support ending. It's not like you're going to flick a switch for a lot of the retailers and it's going to be okay. So I think that's probably the main picture that I'd want to paint. The underlying sort of fundamentals of the Leeds, the Leeds economy are still pretty good. I don't think any of our area, any of the councils in our area have what you would call a surfeit of empty flats and empty grade A office. That there hasn't been lots and lots of spec build in this part of the world. It must be a Yorkshire thing. I think, whereas other places have got that, other big cities have got that. So in terms of, again, transitioning back, I think we're pretty well placed. And I think the recent decisions of very positive decisions of the UK Infrastructure Bank, Bank of England, BBC, DFT, and you might also say John Lewis, which could have had quite a significant effect on our retail sector in the city, show that there is an underlying confidence in the economy. But I think we're going to have to work really, really hard at understanding the return to work, how that's going to affect our different areas. That could have a positive effect on, again, outside Leeds city centre. So we're doing a piece of work looking at the city centre and our district centres, because we have big district centres in Leeds like Morley and Chapel Allerton, Wetherby, etc. that we're working on. And so I think those issues about how that's going to fall out and how that's going to land will have a big effect on how the economy recovers. And there are both risks and opportunities in that, where the more balanced approach to developing the area is one that, if anything, this could improve the overall sustainability and this thing about not everything going into the big city centre. But equally, we need all of our centres to thrive, and we there are still very, very challenging conditions for some of those sectors. Thank you, Tom. And certainly I was in Leeds City at the weekend, and it's the busiest I've seen it for quite some while. And busy at the tills, not busy looking, which is a good thing.
And secondly, and interestingly, your point about the wider area, and I'm sure this will be a delight to Councillor Swift, that the Peace Hall, which is another one of my little pastimes, some of the traders have recorded some of the best trading they've had since we reopened, not reopened from the pandemic, but reopened in August 2017. So let's hope some of that follows through. But you're right, Tom, the reimagining of retail from what we were used to and what we've become Amazonized to what is there some middle ground. And I think there are people out there, and I think you're aware, Tom, as I am, that have views on how we might be able to actually keep the high streets alive, but deliver something akin to the click and collect. But anyway, that's for another day. So any further comments before hopefully you agree we can note this report and move on the agenda? Okay, thank you, James. Thank you, Brian. We note the recommendation and note the report, and thank you for that. But particularly if we could take away this point, not just specifically to creative, but more generally, but we certainly would like to ensure that we get an answer on the question read by Cully. So we're going to move to agenda item 6, and I assume this will be you, Brian, in terms of the latest on COVID. Please assume people have read the paper, and I'm sure you'll pick out the salient elements as to how the thing might have moved in any particular direction since we last considered this matter. Brian.
Okay, thank you, Chairman. Just to pick up on some of the salient points, and in particular the retail sector, I think there is an expectation that throughout lockdown, people have not been spending money, and the pent-up savings will find them, find their way back into the retail sector. We've started to see an increase in footfall in the town centres as well, which is good news. So I think there is cause for more optimism. With regard to business liquidations, finance and cash flow is still an issue. Liquidations in the region were down to 350 from 850 the previous week, but access to cash and access to finance is still a concern for the businesses across West Yorkshire. And just to reiterate what Tom was saying, a lot of anxiety around rates relief and grant support, and that falling off the cliff edge. We've seen huge demand for grants. 110,000 payments have been made to businesses across West Yorkshire, over £300 million worth of grants dispersed, which is an incredible amount of money to go back into to the economy to support businesses. And obviously, the other concern is that furlough ends on Friday, and in West Yorkshire, we've got 140,000 people still on furlough. So that's bound to have an impact in terms of number of people being made redundant and entering the labour market. So we continue to offer support through the employment hub, matching people up to employment opportunities and advertised vacancies. Again, we've got a mixed picture on advertised vacancies. Some parts of West Yorkshire are looking better than others, but overall advertised vacancies in the region were down last month by 9%, but it is a mixed picture depending on which sector you look at. I'll take the rest of the paper as read. I think there are other wider economic factors that will come into play as we move forward. I think it's highly likely that we'll see increasing energy prices as demand increases, and that will put further pressure on businesses. But we need to obviously make sure that we're well placed to continue to support businesses through the next 6 to 12 months, through the grant support and through the business advice that we're offering through our existing programmes. I should mention also the recovery plan and the progress that we've been making on the entrepreneurship proposition. Obviously, with lots of people entering the labour market, we've seen some highly skilled people who are looking to start and grow their own business. So we're putting in place a programme of business startup support to encourage more startups, increase the survival rates of those businesses. Not just machine or labour intensive startups, but also some of the knowledge intensive businesses that are going to grow and hopefully create the jobs of the future. Happy to take questions, Chair. Thank you.
Thank you, Brian. Any comments from anybody else? Any questions? Whilst you perhaps contemplating whether you wish to, I note with interest that the recent launch of the government debt dated 2051 bond was massively oversubscribed, so that confidence in the UK economy is obviously high, and whilst we can't be complacent, at least we can take some sense of optimism. Ben, did you want to come in? And I think Mandy just raised a question about furlough being extended to September, which
Chair, that's what I was going to say. Just for the avoidance of doubt, that what Brian said was the original end date for furlough, end of April, but that's since been extended in the budget to the end of September.
Yeah, apologies, my error.
Yeah, fine, okay. Anybody else want to raise anything before we move on? Doesn't appear so. Are we happy then just to note the recommendation in para 10 on page 42? If so, we'll move on to the latest update on the capital programme. And since we last met, we've come to the end of the local growth fund. For some of us, it only seemed like yesterday that we were, making our pitch and seeing how we did. And as we'll remind ourselves, not with any sort of contentment, but actually confidence that we secured through rounds 1, 2, and 3, in absolute terms, the largest amount anywhere in England. And we've pursued, despite some hiccups from a standing start over the last 6 years, the assiduous delivery of that. And we're going to get the latest update from Melanie on that, recognising that one of the funds still runs till March next year, namely the Getting Building Fund, and we'll see what happens thereafter. Melanie.
Yes, thank you, Chair. So just in terms of where we're up to, yes, we've had 6 years of the Local Growth Fund, and the fund formally ended 31st of March. We actually have been allowed by government to claim any expenditure on schemes that are already in contract this month. So we are still working through final claims. We are also looking to close the accounts for last year as well. So it's a moving picture, but it's moving in the right direction, in that we are claiming even more money as the fund comes to an end. So we will have spent the allocation on the growth deal. We have overspent on the economic development projects to the tune of just over 9.5 million. And then on the transport fund, we are slightly down on our forecast, which brings our total lifetime growth deal to just under 500 million out of the 516. But what I can say is that commitments that we have in contract with our transport fund schemes take us to above that figure. So we do have full spend on the programme. We also have until March 2025 to report the outputs from that project, and we will obviously continue to do that. So there will be quarterly dashboards that will still be reported through to government. We've attached here the latest dashboard that had gone in, which was Q3, and we're still working on finalising the dashboard for Q4, so that will come through to a subsequent meeting. So just on transport fund, I mean, there were some projects that had slightly gone up against forecast. There were some that had slightly gone down, given the details of the individual projects, but a very positive position overall. In terms of broadband, we are just coming to the end of contract 2, and we're still working through the final claim, which we're hoping is going to utilise the underspend from contract 1. And we're just working out some of the contractual issues on the third contract 3. We're just looking at state aid and also cross-border policy. But again, once we've sorted those legals out, we can crack on with that, and we'll get moving on that. As you said, Chair, the current programme that is running for this next 12 months is the Getting Building Fund. So this is the one where the government asked us for shovel-ready schemes last summer. We had £52 million that was allocated to us, with a 50-50 split of that funding over last year and this year. And most of those schemes have now come through for final approvals before they go into delivery. So we're making good progress there. We've set out in table 3 where we've got spend against those projects. And we were asked at our performance review with government about some of the outputs, and we haven't got outputs that are starting to come through yet on that programme, but we do have obviously outputs that we can start to report against the growth deal. And even though particularly on housing, we are we have front funded a lot of that activity, and we expect the homes to come through and be reported by March 25, but we've just set out there homes completed and homes enabled. So that's where we're up to, Chair, in terms of the capital programme.
I'm sorry, I was on mute there. Thank you, Melanie. Is there anything you wanted to add, Angela, in terms of that? And perhaps, and I'll just set him up, hopefully, Alan, just to, Melanie's mentioned outputs. As we know, I'm very focused, as we all are, on outcomes. And perhaps Alan could just share with the board where we are on our impact assessment, because you may recall, or some may recall, we did do something a number of years ago on the more modest amounts of money that the LEP had received pre-growth fund, and we are in the process of doing that again. But I'll just pause there. Is there anything you wanted to add, Angela? No need to if you don't need to. I think Melanie's probably adequately covered it, but I'll just give you the opportunity as the accounting officer.
Thanks, Roger. I think just to add that the figures are still subject to final audit. We'll be doing a final review, make sure we've maximised all the funding streams, but it looks a generally positive place. So we'll report back to the next meeting on the final figures. And
just remind people also, we have the returning funds from the Growing Places Fund. I can't quite remember the latest number, but obviously a fund that we could have given all of that money away once and we chose to lend it. Not all of those loans have been successful, but most of them have. And we've enjoyed the interest income, and we'll now be using the revolving capital for future investment. So thank you. Alan, did you want to just come in and just share with the board where we are on that impact assessment? And then I'll pause and see if there are any questions or comments anybody else wants to make.
Yeah, very happy to, Roger. So we commissioned Arcadis to conduct an independent impact evaluation of the non-transport elements of the growth deal. The reason for that is clearly the transport elements are the investments ongoing over a much longer time frame. So the evaluation team has done desk-based research. They've held interviews with staff. They've done a stakeholder survey, and they've done some economic modelling over the last couple of months. We're in the position at the moment where we are just working with them to finalise the report and hope to make that available to the board sometime within the next month, and it'll draw conclusions on the impact across various types of returns. So impact on employment, of course, overall economic returns, economic return on the investment, and the impact that it's had on wider strategic priorities. So I'm not going to give you any kind of headline figures today. It's all still being worked on, but we're getting to a place where we've got near final conclusions being drawn, and as I say, sometime within the next month we'll be able to share it.
Thank you, Alan. And I too am not going to give any non-finalised narrative, but also to say that one of the things I asked, and I think the board, hopefully the board will agree with this, was to perhaps understand the counterfactual. You may recall that in our economic recovery thinking, we've characterised rescue, retain, reimagine, but also resilience. And what I was interested to know, and I hope you will agree, as to what resilience to that downward trend that's been experienced nationally has the local growth fund potentially put into what would have been an even more catastrophic reduction in the economy, because that gives us some clue to what cocktail of things provides some economic shock absorbing. Ben, did you want to come in?
Chair, thank you. It's just a reminder to the board, really, that because you mentioned Growing Places Fund and the returned capital into that fund, and it's just to remind the board that I think we previously endorsed through the board and through the Combined Authority the channeling of those funds into a loans fund, yeah. And Brian's bringing back a paper in to the next LEP board or the one after with a kind of proposition for that and the procurement that we're going to go through. Perhaps
Brian might just remember from the original capital base of 35 or thereabouts million is just exactly how much we will think we will fully recover. I know there's some long dates on some of those loans. Do you have just a sense of it? Because I think it's fairly substantial, if I remember rightly.
Yeah, I mean, the indicative, well, the budget for the Business Accelerator Fund, which is from the Growing Places Fund, is just over 20 million. It's likely to rise to somewhere in the order of 26 million when all the receipts are in. But we are working on the basis of launching a fund with a value of 20 million in the first instance.
Thank you, Brian. Just to remind colleagues, we could have given all of that away at once, whereas and these monies were for stalled development projects. In other words, where there was market failure to put monies into construction. So it's hardly surprising that some of those haven't quite worked, but the majority have. And we've enjoyed not only an interest income, but also the benefit of that capital coming back. And I think we should not be self-satisfied, but pleased with what we have achieved. And those places that decide to give it away once probably haven't had some of the level of inquiry about the ones that went wrong, rather than the pats on the back to everybody for those that went right. So anyway, thank you for that. Are there any further questions or comments before I go to the recommendations? Because I do need to get your endorsement on the data capture for quarter 3 so that we can submit accordingly. Mark, did you want to come in?
Just very briefly, thank you, Roger. And I guess it's a linked question on outcomes, but specifically linked to broadband. And so from the paper, I note that we're underspending on that product, and also the comment that the gain share from contract 1 is going to be retained for now. And I think I link that to what we've just talked about and the increasing importance of high quality broadband, across our region for businesses and communities. So that leads to my question, which is, how are we measuring the outcomes of specifically this digital connectivity? And are we investing enough based on our experience over the last 12 months in particular?
Okay, thank you. Can you just hold that question, Brian and Melanie? Could you also direct you to the question from Rashik in the chat? If you have a chance just to look at it, either of you, and then perhaps we can get a response. Do you want to start, Melanie?
Yeah, sure. So in terms of the broadband funding, our target or priority, if you like, at the beginning was to achieve 99% connectivity for our businesses and communities. And with each round of the broadband work that we're doing, we're edging closer. I think at contract 2, we were looking at 98%, and contract 3 should take us to that 99%. So that is certainly what we're aiming to do.
Thank you. On Rashik's point, did you see it, Brian? Could you address it?
Yeah, just in terms of commissioning loans for green skills through the devolved adult education budget, we could commission, if there's sufficient labour market need and demand, we could commission providers to deliver that fully funded adult training for example, for green skills, if there's an identified need.
I was just thinking out loud, Brian. I was kind of thinking if there's people who are being made redundant or have got some challenges, then skilling them into a new growth sector could be quite useful, and green skills would be a good place to look.
Yeah, absolutely.
Okay, thank you. Does anybody else want to raise anything before I perhaps go to the recommendations and seek your noting? I don't see anything, so perhaps obviously we note the report, and thank you, colleagues, and I think importantly thank you to all of the officers on this call and all of the teams and all of the other people for the sustained patience, persistence, but also performance that delivered the largest and most complex of programs, literally from a standing start. And I hope the board will join me in, and the minutes will record our thanks to all involved, even in circumstances where the cash flow of how we should spend the money wasn't something we would have agreed to at the outset, but had to work within and worked our way through. And that, the final conclusion is that this LEP and this board has delivered on what it set out to deliver, subject to those final knockings on outputs Melanie mentioned. So I'm assuming you're happy not only to note the progress, endorse the data capture, and perhaps join me in recording a minute of our grateful thanks to everybody involved, both present and past. And a round of thumbs up will cover those 3 items. So I'll pause there. We appear to have a few thumbs up, and that's good. Thank you very much for that. We're now going to move into agenda item 8, where there are a series of changes to governance. We're going to, between Caroline and Ben and I, and where appropriate, Mark Roberts as the deputy chair, going to go through this and cover off a number of things. But perhaps if I could invite Caroline to deal with the member changes piece of the recommendations, then we'll pause, and then I'll invite Ben to come in, stroke Mark as required, and then we'll go through the other elements. So Caroline, over to you.
Okay, thank you, Chair. Yes, I just take the board briefly through 1.2 to 1.3 in the sorry, I'm getting a lot of feedback in the report. So these are proposed. The first one here is for the board to note a change in appointment to the board in terms of the Leeds City Council member. As the board is aware, Baroness Blake, our former member, has left the LEP board, and Councillor James Lewis is the new LEP board member for Leeds City Council, with Councillor Deborah Cooper as his substitute. So this is the first opportunity to formally make that, bring that change to the board's attention. The second 2 aspects for me to pick up are firstly to recommend to the board that Joanna Robinson's term of appointment is extended until our annual meeting in June this year. Otherwise, it would have fallen away at the end of April. So that is set out at para 2.2 of the report. And it's also seeking that she continues as chair of the BCG until that date as well. So that's the recommendation for the board's consideration. The third matter is in terms of a vacancy on the Business Innovation and Growth panel. Expressions of interest were sought from current members on the LEP board and private sector members for a replacement, and Mandy Ridyard has expressed an interest in that, and the recommendation to the board is that she is appointed, that she is nominated to the Combined Authority for appointment at their next meeting. Of course, slightly later on this agenda item, there is the changes to committee arrangements. Part of the paper is here for the board's consideration. So the proposal here is that she is nominated to the big panel or its successor committee. So thank you, Chair. So one point to note and 2 recommendations for the board to consider. Thank you.
Thank you, Caroline. So are the board happy not only to note the point Caroline's made, but also approve those recommendations? And if so, the usual thumbs up would be helpful. And we are getting sufficient. Thank you for that. So at this point, I will hand to Ben and, if appropriate, Mark. And I want the minutes to record that I didn't participate in the outcome of this discussion for reasons that are self-evident. So over to you, Ben.
Thank you, Roger. So I'm now looking.
Sorry, I should have said I'll happily go off screen if that's what the board would require. So it's for the board to decide, not me.
Okay. Thank you, Roger. So I'm just to confirm, I'm looking at page 62 of the pack that talks about the LEP chair review. It's probably just worth me giving a bit of context to this piece. In 2018, the government launched a strengthening LEPs programme looking at LEP geographies and LEP remits. That concluded for Leeds City Region LEP in a paper to the LEP board in February last year. Those members that were on the board at the time will recall the work that was done to look at potential combining of the LEP with North Yorkshire and other options. In the event, it was a change in the opposite direction to consolidate around a West Yorkshire geography while maintaining strong relationships with the surrounding areas. That was the result of the review. And in that paper in February, it was clear that West Yorkshire, through the devolution programme, was entering a period of change, and that therefore it made sense to extend the tenure of the current LEP chair up to the 9-year maximum that was permitted by government, in the light of those exceptional circumstances around devolution. I think the subsequent pandemic over the course of last year meant that was a sensible decision, and so we haven't had the process of a LEP chair changing during the pandemic, and Roger's been able to provide stable leadership to the LEP through that period, and we'll come back to that. So the one caveat there was that that 2-year extension was subject to a review by the time of the annual general meeting of the LEP in June this year, and the report in front of you in the paper discharges that requirement. We took the opportunity when looking at this, not just to look back at things that had happened over the last year, but also to perhaps more pertinently to look forward to the challenges facing the LEP, and that's particularly in the light of the government's new review of LEPs that it launched as part of the budget. So the method we used was a series of interviews, and the different types of people that we spoke to is set out in the paper. I won't go through the findings and the outcomes of the interviews in any depth. They're there for you to see. But I think it's well worth noting that the vast majority of comments were positive, both about the work of the LEP, the depth of its partnership, the diversity of the board, its contribution, particularly in terms of taking a longer term view towards the economic recovery from the pandemic, and that the current chair has played an instrumental role in seeing those issues through, as well as taking on a wider perspective for Leeds City Region through things such as chairing MP11. And it's also worth noting, as we did in the work, that the government's annual review of LEPs gave a clean bill of health to Leeds City Region LEP. So the recommendations that came from that were for the current chair to remain in post until the end of the agreed period of tenure, for the LEP to play a proactive role in the current LEP review, but in the light of comment and in the context of the uncertainty about what the government's LEP review will, what shape and direction it will take LEPs in going forwards, that we wait for the outcome of that, and then once we know that, then work in partnership with our partners, with public and private partners, to review the kind of scope and role of the terms of reference for the next LEP chair ahead of the beginning of that recruitment process. So if members are comfortable, I'll stop at that point and then seek any views on the recommendations in the paper that concern the LEP review. I'm not seeing any comments, and I wondered therefore if people are okay to approve those recommendations. Caroline, could you just highlight which recommendations we're talking about in the context of the paper, because I haven't got it on my screen at the moment.
Apologies, bear with me. It is recommendations on page 65, and it is recommendations 4, 5 and 6.
Thank you. So on the basis that everybody is content with those recommendations, that allows me to hand back to Roger. Many thanks, everyone.
Thank you, Ben, and thank you to you and other colleagues for the review work that you have undertaken, and also for your continued support to my tenure. And I will be doing several things in the next period to June of next year, ensuring, insofar as it's appropriate, that the recruitment of an appropriate successor, although I won't be involved in that recruitment, guiding the terms of reference, etc., but importantly, supporting on behalf of you all the successful onboarding of a new mayor to West Yorkshire and all of the other things. But thank you for your continued endorsement. As I said, thank you to Ben and his colleagues, officers, for the work they've undertaken. So we're going to just touch on the light touch, not my words, officials' words, LEP review that Ben mentioned. And this is not occasioned, as indeed the strengthening LEP's role of a few years ago around performance variations, more about central government policy change. And in my various roles as chair of the Leeds City Region LEP, chair of NP11 and vice chair of the LEP network nationally, you won't be surprised to learn that I'm playing a fairly full part. In fact, we are going through working arrangements with government officials with a view that the proposals to ministers will be ready to go pre-summer recess. Whether we'll have the answer at the same time or thereafter, I'll wait and see. But we've made a good start, a start that's only about 10 days old. I have been asked by the LEP network to lead there's several work streams, and they're going to happen sequentially, but to lead the initial, and I would say arguably the most important one, of setting the scene as regards the objectives and functions of LEPs going forward. And as I said, government see this very much as light touch. It's evolution, not anything else, and it's about the continued role of the private sector in genuine and equal partnership with the public sector to continue to deliver on the journey we've been on. And I'm delighted to say, and maybe I shouldn't say this, but I genuinely believe that that when it comes to the national LEP network, we are, I wouldn't say the only, but we are an exemplar in terms of what we do, how we do it, but also the accountability for public money. And you'll hear more about that when we come to the further item, which I'm probably going to hand to Alan or Ben to set the scene on in terms of governance going forward once there is a mayor in place. Now we are a mayoral combined authority that endorses hopefully what I've just said. So watch this space. In fairness to officials, they are very much working with us on this, want to get the right answer and be able to make recommendations to ministers about the ongoing role of LEPs, the evolving role of LEPs. And whilst certain new funding streams like the Levelling Up Fund and the Community Renewal Fund are not going to be funneled through LEPs, but will be dealt with initially a different way, that doesn't mean to say rule out for all time that something analogous to certain funding streams may or may not become those which we bid for and we that we direct in partnership with others. So let's not rule it out. Certainly not from what officials have told me and others. But as I said, we will watch this space. So I don't think there's anything further to add, but I'll just pause to see whether Alan or Ben in particular wanted to add anything, because I think it's just really for noting as I set out in agenda item, recommendation 5 on page 65. Ben, did you want to add anything, or shall we move on?
I think only to say, Roger, that I think the government's still looking at producing some findings before the summer recess, with a view to then those being implemented by the end of the financial year. So it's quite a tight turnaround time.
Yeah. So your point's absolutely well made. For 22-23. So for whoever takes on the LEP chair role, it'll be at the start of a new construct and a new relationship. But at the heart of it is an equal partnership, all being well, between the private and the public sector. So I guess just to seek your endorsement that you are content that and others may get involved along the way, that as your chair, in all of the guises that I've got, but in particular as the chair of the Leases Region Enterprise Partnership, that I continue to take the proactive role I've started on. Just as I said, it would be useful just to have your formal endorsement of that. It would appear that's has some resonance. That's great. Thank you for that. We're now going to talk about some of the changes to governance, I think, Ben, aren't we? Are we now?
Yes, Chair.
Yeah, we're going to go to changes to governance, and perhaps you can set these out for the broad more generally. I should say that colleagues have kept me fully apprised of this. We've had discussions with the panel chairs, and they are aware. So it's not going to come as new stuff to everybody, but it is important that everybody gets to a common place of contentment or otherwise of what is being proposed. I'm going to hand to you, Ben Alan, I guess.
Thank you, Chair. So if I make some opening remarks, and then we can take it from there. So this is attached indirectly to your papers through a link. I think all members of the board have been able to see this in advance in one form or another over recent weeks. But I'll just highlight again the purpose and the rationale behind what's being proposed here. And I think it is important to say that these are proposals, albeit now endorsed by the Combined Authority a fortnight ago, but nothing here would be implemented ahead of the AGM, and there's still a fair amount of work to do in terms of refining these proposals over the coming weeks. I think most members are familiar with the rationale that sits behind this. The current structures that integrate the combined authority decision making with the LEP decision making, I think have served both boards well over recent years. But with the devolution deal came an increase, both some of it already happening and some of it due to happen, in the volume of work and the numbers of both funding and decision making work streams, plus the evolution of particular agendas, particularly around inclusive growth, and I'll come back to that in a moment. Which mean that it was sensible, particularly in the light of the necessity to incorporate the move to a mayoral combined authority and the role of the mayor into the proposals, to look again at the decision making and the committee structure. And so what's proposed is a model that seeks to do three things really: to provide greater capacity for decision making that is accountable and visible through a set of clearer delegations and an empowering of the joint subcommittee structure that sits beneath the LEP and the CA. Secondly, to enhance the scrutiny arrangements for those enhanced and devolved new committees. And thirdly, to deepen and strengthen the collaboration between the public and private sector. And I think for the LEP board, this is the key one that I wanted just to dwell on for a moment. I think we feel that the relationship and the partnership between public and private has been a strength of the Leeds City Region Enterprise Partnership, and the fact that the strategy and the delivery is very much between the LEP and the CA, two sides of the same coin, is a real strength and integrates and provides more clarity in terms of the vision for the city region. What the proposals do is essentially they seek to devolve more of the content of decision making to the subcommittee structure, and to allow the potential for more delegated decision through those committees. Constitutionally, in order to do that through the combined authority, it's the committee that has the delegation, and that committee has to be chaired by a member of the combined authority, and or a member, and that. So that means that the main change in terms of panel chairing is that we're looking for or need to have an elected member as the chair of the committee, with a private sector deputy chair, and we believe that will create the strength and depth of partnership, and it also allows us to have LEP board members as voting members on these committees. So what we're hoping here is that the committees take on more roles, not just on the policy side, but on the delivery side as well, having a greater interest and influence over the spending programmes, and that is a joint endeavour between LEP board members and members of the combined authority and the mayor. That in its heart is the proposition. The practical changes that result are, I think, twofold. One is that we're looking at a different way of and an evolution of investment committee, with investment committee evolving into what's called a resources committee. That allows greater transparency around some things that have got much larger in recent years, such as the budget setting process, and the corporate decision making around the body of officers that serve the LEP and the CA, and that body would then also have the ability to look at capital programs and spending programs as well. So an evolution of investment committee into a resources committee, and that would, depending on the outcome of the LEP review, because we're unsure whether we'll be able to keep the kind of integration of budgets as we have. And we also have, on the combined authority side, the police and crime budgets that need to be considered separately, but are nevertheless a mayoral budget. Ensuring that all of that is done transparently is a key benefit of having a clear resources committee. The other change is to move away from a bespoke inclusive growth committee, and instead to embed inclusive growth through the work of the other committees, and critically through the local enterprise partnership and the combined authority themselves. And this was an issue. I know this has been an issue in terms of feedback on the proposals that we've had informally as we've been developing them. The real logic here is I think both boards felt that in the past we needed the focus of a committee in order to drive the focus on inclusive growth, and to provide that focus on the initiatives and highlighting the issues. I think the combined authority members feel that that's a job that has now been achieved, that the work on inclusive growth is fully recognised, that there are there's a lot of work underway in terms of targets and indicators, and but that what's really critical now is that inclusive growth forms part of the work of every programme and every work stream in the LEP's portfolio and in the CA's portfolio. So we're very much looking that the champions of inclusive growth become the LEP board and the combined authority. They will hold to account the subcommittees that are busy delivering programmes, and we would be looking to set kind of very, very explicit performance indicators and reporting around the progression towards those inclusive growth outcomes in the light of the inclusive growth framework that the board's been discussing over recent months. So the proposals are here for discussion and for endorsement from the board this morning. As I said, these are not decisions that come into effect now. It's very much giving officers a steer to fully work up the proposals to come to the LEP AGM on the 9th of June. And I'll probably stop there, Roger, and take any questions or comments.
Thank you, Ben. So I would be interested in getting a range of views, comments, or clarification questions. This is your opportunity. I do believe it's a further embedding in not just influence, but in the decision making of the things that we're going to invest in, and meaning that the partnership is alive and well. And interestingly, from my vantage point of being vice chair of the LEP network nationally, I think we're probably the most integrated and involved than anywhere I can actually point to. In some places, it's two separate families that seem to operate, but I'm not sure how effectively. But that's not for us. This is for us. So can I open it up, and perhaps you can indicate either electronically or by raise of hand, and I'm going to make sure I don't miss anybody, because I did miss Cully earlier, and I'll come back to that, Cully, just to make sure that whatever point you wanted to raise, even though the agenda item moved on, but that we've not lost it. So over to you.
Sorry, I don't know what I can't remember what it was now. So
okay, fine. Well, I didn't want to leave the meeting. Fine. If it occurs to you later, Cully, we'll pick it up. So anybody want to raise anything on this? I wondered whether my deputy chair had any views on it. But before doing so, Shirley, do you want to come in?
Yeah, thanks, Roger. I think I really gave my feedback at the informal meeting we had recently, but I agree overall with the structure, and I think that the previous paper demonstrates that this LEP has done amazing work and had significant impact. And my only concern is what I raised the other day about the, I do feel that the arrangements for inclusive growth are weakened. I'm not saying you should keep that we should keep the panel or a board for it, but there needs to be something strong. I mean, I've just now left a webinar to come onto this meeting where we've been discussing inclusive growth and representation or lack of representation at senior levels from people from minority ethnic groups, and it's getting worse, and the gap's getting worse in achievement. The poverty gap is increasing, and I just think if there needs to be some stronger approach to it. So I just really wanted to just say that for the record, really.
Yeah, thank you, Shirley. I am in agreement with you that we need to keep it under review. Unlike the other groups, it's not as fully formed, but the view of officers and the CA is it's informed enough, and perhaps we can think of some light touch mechanics to ensure that the point you raised and others have raised with me privately are not lost, or if we are losing something, we intervene, and I'm sure Ben and colleagues would understand. So Mark, did you want to come in?
Well, thank you, Chair. And I guess firstly, just to say thank you to Ben and his team for spending the time to sort of take, myself and other panel chairs and other members of the LEP through the proposals in detail and give us the opportunity to, ask a lot of questions and input sort of outside of this forum. I think, for me, this really should be a partnership of private sector and public sector, and partnerships work when the working relationships are good. And certainly my experience of working with our public sector colleagues and also the officials within West Yorkshire has always been very positive. And because of that, I'm very confident that the new arrangements of having a public sector chair but a private sector deputy chair could work really, really well. So I do support the proposals. I think very similarly to Shirley, in one of those conversations, we have had a question about how we keep the focus on inclusive growth and what might the options be for keeping that, and other items like it at the very, very front of the radar for us all. And I know that, your team, Ben, and everyone are sort of actively looking at that now. So I just wanted to again reiterate sort of thanks and feeling positive at going into this new sort of setup with the new mayor and hopefully continuing a really productive partnership.
Thank you, Mark, and thank you for your note in the chat. Helen, on the same theme as Shirley. Does anybody else want to comment? Joanna.
Thank you, Roger. I don't particularly want to repeat everything that's just been said, but I just want to echo what both Mark and Shirley have said, and also in the BCG meeting yesterday, very, very similar comments, widely accepting of the new structure, and think that it's definitely a good framework to move forward. But this repetition of concern for inclusive growth, and making sure that a champion on each committee doesn't become a lone voice, and there maybe needs to be something where each champion on the committee gets together to continually drive forward the agenda and make sure that they're not isolated amongst you know, others within a committee. I think it's just really important that we think of something to ensure that inclusive growth is very much embedded, and the team can get together on a regular basis to continually drive it forward.
Thank you, John. Before I bring you in, Ben, I was just going to ask, I know he's off camera, whether Cameron had any comments additional to that which have already been made on this on the inclusive growth aspect, but more broadly. Cameron.
I don't actually, Chair. Yeah.
Okay.
Thank you.
This is such an important issue. I want to ensure that everybody's had a chance to speak, and I thought there might be some aspects, but your endorsement is also helpful to have as well. Ben, do you want to come in?
Chair, it's only to say that we absolutely recognise the comments that have been made around inclusive growth, and my suggestion will be that we'll bring forward in between this and the next, in good time ahead of the AGM, the propositions for how we think it can be not so much handled. It's more about how it gets mainstreamed and strengthened and made more explicit in the work of the LEP and the CA. So we'll aim to do that in good time before the papers are finalised for the AGM, so that members can feed into that.
Thank you, Ben. I think Tom, did you want to come in on the conversation, Tom?
Yeah, Roger, can you hear me okay?
We can, but we can't see you. But
yeah, no, I'm
we can hear you.
So yeah, I'm on the move, so better that you don't see me. I was just going to say, given the comments, I do think it's a very strong steer of supporting the proposals, but expressing this concern about being reassured about inclusive growth, and I think that gives us a good way into the work. And one thing that springs to mind is one of the ways that you can give a bit of reassurance about things like this is that you build into the annual budgeting and reporting process a specific commitment to report back or to give specific a specific element of the budgetary process to saying how it's going to be dealt with. So there are devices like that that I think can strengthen and build in to the way that the whole system works moving forward. A bit of that reassurance. And so, I think Ben and the team have got a strong steer. That I think there's very strong support politically from the leaders from previous discussions about this agenda. And I think that's just, that gives us a good way forward and a good first conversation to have with whoever is elected as the mayor.
Yep, thank you, Tom. And I guess you'll be one of the first people to know who is elected before the rest of us do. But and as Shirley said in the chat, and I agree completely, metrics will help one hell of a lot. Cully.
My comment really is just to reassert that sometimes we just need to be consistently aware of some of the structural issues around inclusive growth that impact on certain communities and certain sectors. And obviously Shirley's talked about poverty and deprivation and all of that. But I think raising the flag around some of the choices and decision-making processes that are structurally aligned to prioritizing a certain way of doing things can themselves be detrimental to creating equity. And so for an example from my own sector at the moment is the tension that currently exists between the need to open up venues, and that some of the pilot schemes that are going on about opening up performance venues, where some, you know, the discussion around COVID passports and the pilot schemes, which have excluded a lot of the community that are either vulnerable or aren't normal attenders, that actually, if you're not careful, you can perpetuate the inequalities that already exist, because you're not tackling some of the structural or biases that already exist in the system. So that's another reason why the inclusive growth conversation, being strong across the different ways we're working, feel really important. We need to hang on to that somehow.
Thank you, Claire. I think Ben and Alan and other colleagues, hopefully you've got a helpful steer from the board, and Ben's response in terms of the AGM will probably have not a specific agenda item, but within an appropriate agenda item, we'll cover this issue and where the thinking has got to. So unless Ben or Alan want to come back in, I think we'll move to just seeking your confirmation that you're content with the proposals for enhanced governance, but also the further embedding of the private public sector partnership in the key decision making and allocation of resources as a further step forward in our evolving but enduring partnership. So if you are content, the thumbs up on screen will be, otherwise will be fine. Thank you. Thank you very much. So thank you for that. That's agenda item 8. Ordinarily, we would have an AOB item, but on this occasion, we haven't got an AOB item, but we do have an AOB item. And Andrew Wright, I think, wanted to just take a few moments to share on the topic of Made Smarter. And I'll also pause just in case there are anything that I've not been notified of anything other than Andrew's point. If there are any other items before, I'll just close out the meeting with the for information items. So Andrew, right, the floor is yours.
Good, thank you. Yeah, this is just to note really that we've been successful in securing some new money, about £1.5 million on the Made Smarter agenda. BEIS is wanting to go forward on the in the Northwest, Manchester and Lancashire. They had 20 million over 3 years to spend on this Made Smarter agenda, which is based on manufacturing, Industry 4.0, AI and increasing productivity. It has been deemed a success, although I think we have to say BEIS haven't been as successful in getting money to follow on with it as everybody would have liked. But the good news is that we're one of, I think, 3 areas that have been given some money to keep the work going and to make some new progress in our region, along with the Midlands and the Northeast. And I guess one of the things that I thought might be worth mentioning in this forum is that the geography that we've been asked to do this work on is kind of Greater Yorkshire. So the responsible body is South Yorkshire. We as West Yorkshire will be taking a leading role on doing some of the actual delivery of the work, I think, particularly on the grants side, where we seem to have been leading on that, and also having had our Made Smarter board for 1.5 years is also deemed to have been a good thing. So that's where we're going for with that. The $1.5 million has to be spent very quickly, which is going to probably control a little bit how we can do it in the balance of this year. But it is a good news story, and there isn't really another opportunity for us to let you know that this is happening. So I thought I would take that opportunity. And also cheekily, if I might just add as well, on Friday afternoon, the first cohort of our entrepreneurs are presenting their lift elevator speeches at 3 o'clock, build. So if you're interested in seeing 15 of our new entrepreneurs in the region say what they're doing, then that would be a nice thing to see some of us along there for that.
Thank you, Andrew. And indeed, in that event also, there's going to be something of an awards ceremony, which we're delighted that both Professor Fiona Murray and Dr. Phil Budden from MIT, who are part of the programme, will be actually in attendance. So that'll be quite an event. So thank you, Andrew. Pausing just to see if there's anything else anybody else wanted to raise. And If not, just to note agenda item 9, the minutes of the last combined authority of March 9th, and the date of our next meeting being the 9th of June, which is the AGM, which will be held remotely. We had some debate and discussion about this, and we took the view that whilst the full relaxation of all of the restrictions isn't until whatever the date is, 20-something of June, as well as making sure that we're able to deliver a public meeting safely and securely in circumstances where our own offices are being renovated, that perhaps, and so I took that decision in consultation with others, that we would have the AGM remotely as we did last year. So unless there's anything further, with thanks on behalf of the board to all of the colleagues for all they've done, and personal thanks from me to you all for your continued support of my tenure as chair, I'll bring the meeting to a conclusion. So, meeting closed. Thank you. Bye-bye. Stay safe. Keep in the fresh air. Don't drink too much. All of those things.
Thanks, Roger. Bye.